What's up, everyone? It's Karthik with MoneyVest. So we've got Enphase earnings on deck in less than 30 minutes at market close at 4 p.m. I think 4:05 p.m. Eastern is when Enphase is going to be reporting their earnings for the third quarter fiscal year 2024. We got lots to discuss in this market close live stream. And again, hope you all are having a fantastic Tuesday. And the markets so far are very, very flat to slightly up. We were down about 0.5% right at the open, and of course started to move right back up. And the S&P is essentially flat right now, with the Nasdaq once again pushing up to over 16 basis points, just a little bit shy of $497 per share. And Nvidia is also flat right now, with Tesla pushing up to 217, but still down about 0.5%. But the main focus for today is going to be Enphase stock, seeing a little bit of a rally of 2% right before markets close. If you guys can see me and hear me, just give me a thumbs up. I just want to make sure the audio and the video is working well. We listened in on the earnings calls for Lockheed Martin as well earlier today. And this right here is going to be the market close for the market, of course, and for Enphase stock as well. So do me a favor, like and share this live stream with other traders, investors that want to join us for the market close live stream. So we'll listen in on the earnings call. We'll take a look at how the stocks are reacting, because there's not just Enphase that is reporting. We also have Texas Instruments that is coming out with their numbers, over $4 billion worth of revenues expected, and about $1.39. And we had CoStar Group as well as Enphase, which is going to be right about there, $401 million in revenue expected, with 79 cents per share for the company in terms of profitability. So this right here again is going to be for the third quarter 2024. So we're going to reload this page at around 4:05 p.m. Eastern to take a look at the financial results. And then of course we also have the earnings call that is open over here, and we're going to start playing that at 12:30 a.m. Dubai time, which is going to be about an hour after the markets, actually 30 minutes after the markets close at midnight here. So super excited. I know a lot of people have taken in a lot of trades for Enphase. We have so many people in our Discord essentially trading puts on Enphase, sold puts. So of course, if Enphase pops here after hours, then there's going to be some profit taking there, I'm sure. But of course, if Enphase drops, I think $89-$90 is going to be a level to keep in mind as a reasonable support, down to, of course, lower levels as well. Now, going over to some historical analysis on how the stocks traded in the past in the last 3 to 4 earnings. By the way, we've got 3 misses on the record here, consecutive misses for both revenue and earnings per share. So, in other words, the last 3 earnings calls, Enphase has missed expectations on all 3 of them by both revenue and earnings as well. So coming over to the quarter ending in December of last year, so fourth quarter 2023, EPS reported 54 cents, small miss, and revenue came in at 302 million. Quarter ending in March, also missing on both EPS and revenue, 35 cents per share. Reported revenue 263 million, so that was a huge decline year over year. And again, the quarter ending in June also coming in with a miss of about $303 million of revenue and about 43 cents in earnings per share. But if you take a look at how the stocks performed, Enphase historically has actually seen some decent rallies. I mean, 17% rally in February of 24 the next day. Then this right here was another 2.7% rally here, but the day after dropped over 5.5%, so the day after earnings. And this right here was another very nice gain post earnings, jumping over 12.8, almost 13% here. So should I or should I not take a trade prior to the earnings that are coming out for Nvidia? So let me know in the comments if I should go ahead and close out my SOXL puts. They're already up, and then maybe sell a put on Enphase. I'm thinking about it. I may do it. I'm not sure yet. I still have about 23 minutes to make a decision. But what are you guys thinking right now? What's the move? What is going to be those put option prices for Enphase? So if you come take a look at ENPH on the put side, for 3 days out, we're looking at $80 sitting at $1. $75 is going to be sitting at 40 cents if you go for next Friday. If you go for 75, it's going to be 64 cents. 80 bucks is going to be $1.48. Kevin says, do it. Oh, man. I know there's a lot of people that are very interested, very much trading on the long side for Enphase here. So it's going to be quite an interesting earnings release. But last 3 times, we've actually seen quite a bit of a positive reaction from Enphase. But the quarter before that, so the quarter ending in October or September, that was reported in October. So same time last year, pretty much, we had Enphase pretty much drop over 14% on Enphase, right? So after the earnings came out, this was about a year ago. On Friday, October 27th, the stock dropped over 14% after the earnings were released. So we had, again, last 3 quarter numbers, Enphase jumping by an average about 10 to 12%. And the quarter before that, same time last year, basically, stock dropped over 14, almost 15%. So expectations-wise, we've already gone over it. 79 to 80 cents is going to be the EPS with just shy of $400 million in revenue. And I think 4:05 p.m. is when they usually end up reporting those numbers. And again, we're most likely going to see a pretty decent move in Enphase stock. There's going to definitely be a lot of volatility for the company right in the next 25-30 minutes here. So do me a favor, folks, share this live stream with everyone, friends, family members, traders, investors, other Discord groups, WhatsApp, whatever, so we can have more people join us during this market close. And markets are very, very flat right now, so there's the lack of economic data, so we don't really have a lot of stuff that's scheduled for this particular week. So again, if you come over to our economic calendar, you'll notice that we don't really have anything that's on a high impact basis, let alone on a medium impact, right? Nothing really, just literally nothing. If I remove for even medium impact, you'll notice there's nothing on the high impact item list for economic data that's coming out. So the lack of data here leads to lack of volatility from the market. So all eyes and ears and attention, everything's focused on the earnings calendar for the markets as well. So this is really what's happening, pretty much this week, next week, and the following next few weeks here. So we went over Raytheon Technologies, we went over Lockheed Martin, so we had a whole live stream for Lockheed Martin as well. I put down my fair value on this particular stock. We went over exactly where I would personally be a buyer of Lockheed Martin. Is down a little bit over 6% right now, but if you want to take a look at that video, I highly recommend you check it out because I went over exactly the entire analysis, the numbers being reported, and what's going to be that buy target for Lockheed Martin because it's a very, very good business for the long term. So yes, 2 companies primarily we're going to be focusing is Texas Instruments as well as Enphase. Enphase is what we're going to be listening in to the earnings call as well. The Money Invest Index right now sits at 3.79, 3.84. So we're seeing a little bit of that increase again. We're in the optimism zone right now for the Money Invest Index at 3.84. So that's where we are. This number is getting updated in real time every 15 minutes. So it's giving us a bit of an idea of how the market's positioning really is at the moment as well. So hope you all are ready. Which company you are most excited about when it comes to earnings for this week? So let me know in the live chat which company you're most looking forward to for this week when it comes to earnings. And I think that Tesla might be the most obvious answer because Tesla is probably one of the most debated stock in the market right now. Nvidia is quickly kind of gaining the ranks of whether the valuation justifies Nvidia or not. But let me know which other company you guys are most excited about for this week that is reporting. Some of the bigger ones, we got Union Pacific, AT&T, T-Mobile, IBM, Texas Instruments. So Tesla, of course, S&P Global. We got Colgate, Coca-Cola. Yes, Lam Research also is coming out, Vault. So there we go. That's going to be on Wednesday after the bell. Wednesday after the bell, we actually have a lot of companies that I would like to listen in on the earnings call. I would definitely like to listen in on Lam Research, ServiceNow, IBM, and even Tesla. But of course, we can only really pick one. So Tesla is going to be the one that we listen in on. But other than that, we definitely do have a lot of interesting companies scheduled for today. So yes, that's where we are. Enphase is up over 2% right now, trading down to a very strong support. My gut kind of tells me that Enphase is going to pop post earnings, just considering how oversold this stock is. And I can also assume that the company probably bought back a lot of shares this past quarter because they have been deploying a lot of capital into their own stock in the last couple of quarters here. So, this of course is going to be the event details. It's going to start, let's say, at 1:30 p.m. Pacific, which is going to be, what time is that going to be Eastern, folks? That's going to be 4:30 p.m., right? Eastern. I just want to double check. That's 30 minutes after the markets close. The Eastern time zone is about 3 hours ahead of Pacific, I believe. So let me just take a quick look. So 3:42 right now. And what is it on Pacific right now? PDT, 12:43. So yes, I think that's 3 hours ahead. So that's about 30 minutes after the markets close is when they're going to start their earnings call. So other thing I was looking at is, again, the financial results from the previous quarters. So free cash flow, $117 million. Marketable securities as of last quarter sitting at about $1.65 billion for the company as well. And let's see. Shares repurchases or anything. So we can also look at this on our platform. So if you come over to Enphase and if you go to cash flow. So, a lot of the times you can look at a lot of details for most companies under the cash flow statement. So I'm going to come over to the quarterly numbers for the last 8 quarters, scroll down a little bit. So common stock repurchase right here. If this number is negative, that means it's an outflow, right? That means the company has been buying back shares. If this number is positive, that means it's a cash inflow, meaning the company is issuing more shares. So, this is a good way to kind of look at what the company is doing in terms of their cash flow position. And then if I look at the shares outstanding, you'll notice that there is a very nice correlation between the shares outstanding and how much the company is buying back, right? So this chart, what you'll notice is that as shares outstanding are going down from 146 million down to 145, down to 146 again, 145, then down to 143, 137, 135, and then down to 135. You can see the shares outstanding going down. Why? Because the company is also putting in more money to buy back their own stock. And they really started to be more aggressive, right? $200 million buyback in the quarter ending in June 23. Then another $109 million worth of buybacks, another $87 million worth of buybacks, $40 million worth of buybacks in the quarter ending in March. And last quarter, they bought back another $93 million worth of shares. And so shares are going down as a percentage of total outstanding. So if this number is negative, like I said, that is share repurchases. And again, this is essentially showing us the company continues to be very confident in its ability to perform long term because they are seeing that opportunity as the prices, of course, trade pretty much near 52-week lows for the company to reaccelerate back up on revenues and earnings and profitability. So very, very important is going to be guidance, from the company, as I've already mentioned, that what are they going to be guiding for when it comes to the last quarter of 24 and very importantly, 2025, if we're going to get any type of guidance. So we're most likely going to get the entire year guidance and the fourth quarter guidance, but in the earnings call, we're going to be listening in to any type of insights we can gather from what the management tells us about the sell-through rates, the inventory levels, and what type of demand are they foreseeing for their microinverters post 2024, especially when rates are coming down. Because in the previous earnings calls, interest rates was the biggest topic of discussion among the earnings call and the participants, analysts on Wall Street as well, because as interest rates have been so high, it's become very difficult for individuals, for businesses, and even for households, of course, to finance solar panels and microinverters because they can cost anywhere from $8,000 to $12,000 when you tag on, the 5P batteries for Enphase, where you need to at least have 2 to 3. It's kind of like a minimum threshold to power an entire home, let alone a business, a retail community. So that can, of course, cost upwards of thousands of dollars, which as interest rates are going to be higher, of course, financing is going to be more difficult. So what used to be your cost savings is going to turn into a huge liability, right? So nobody really wants that. So as rates come down, I think that could be a huge tailwind for Enphase moving forward. So all of that, very, very important for the company, going into 2025. So, okay, this week, Lamb Research, yes, would you sell calls tomorrow before the closing bell on Lamb Research to hedge? Let's take a look here. So we're going to quickly take a look at LRCX. And, this stock's been selling off quite a bit. So, yes, it's trading down to a support. It is also pretty oversold. So maybe Lamb Research could be the play for tomorrow's, because I am going to free up some cash on SOXL. But even with the cash that I have sitting on the sidelines, plus the SOXL that's going to collateral that's going to free up, I'm still really going to have, close to about 6,200, which I'm looking to put up as collateral for another put. So I don't think we've got any stock that's going to be trading in the 70. Well, maybe I could sell puts on Lamb Research. What is going to be those premiums for this? So if you come over to premiums for this Friday, for let's say $65, yeah, 30 cents, that's nothing. $62.10, also nothing. So if you go over to, let's say, next Friday, $65.62, and then we got $60, about 32 cents. So not a lot of premium there. But Vault, when it comes to selling calls, yes, you could, but just be mindful that the stock is really oversold and it's also trading at a support. So any type of a pop in the stock here could put you in the money very quickly. So unless you're comfortable with whatever strike price you end up choosing, if you're comfortable with letting your shares go there, that's totally fine. That's a decision that you'll make. But just be mindful that, with selling calls, unless of course you are not planning to sell your shares, pick a strike price that's either way out of the money or don't sell one in the first place. So if you're selling one, you need to be okay with getting your shares called away. Unless, of course, you want to start rolling options like I am with NVIDIA, which is absolutely getting ridiculous at this point. I'm out to November 29th expiration at 116 strike, and now I'm looking at December rolls, December expirations to 119, 120 strikes, and we'll continue to do that. As NVIDIA continues to trade higher, that's a good thing because I can continue to roll my options further and further. But of course, I'm extending that timeline as well. So I really, really want NVIDIA to not go anywhere for the next month here until earnings. Earnings come out on November 15th for NVIDIA. So if NVIDIA takes off prior to earnings or, pops after earnings, you better believe it. I'm looking at March, April, May 25 for rolling those call options out to get some premiums and also unlock more capital gains, basically. Okay, so Maruf, do you have a position on Enphase? Good idea to buy now for the long term. So I don't have a position on Enphase. I had my shares called away because I was selling calls way before. And I was able to get rid of my shares in the 120s, I think. I updated everybody in the Discord as well. And right now, it is back down to a very decent support. So what I would suggest is instead of placing a binary trade, especially when it comes to long-term investing here, instead of placing a binary trade right before earnings, you definitely want to be more reactive. And, markets are one of the places where you don't need to be proactive. You can be reactive and make a lot of money where you let the markets sort of settle down, right? Never trade going into this binary event and let the markets do its thing. Let the market digest the report and the earnings, and then you can evaluate the situation. And of course, then make a long-term decision on whether you want to be buying or not. So, oftentimes, I've seen people buy calls, buy puts ahead of earnings, and those options, in most cases, end up expiring out of the money. And the only time I am fine with trading options right before earnings is if you're selling them. So that's what most of our community does. Is like we mostly sell options, and that's why our success rate is much higher. Collectively, as a community, I can proudly say that I think all of our members are very disciplined in their approach. To very significant extent, we know what we're doing with risk management, and we understand how the game needs to be played in order to make money. So our success rate, I can confidently say that I'm very proud collectively as a community, is very, very high. You'll find more winners in our community than people losing money. So that's a good thing. Okay, so we got about 9 more minutes for the markets to close, and then another 14 minutes until Enphase reports earnings. They usually report at 4:05 p.m., so 5 minutes after the markets close. And then the actual earnings call starts in about 40 minutes or so, 30 minutes after the markets close. So we'll be taking a look at what Enphase has in store for us. This has been a painful sell-off for the company. Of course, I did a video over the weekend and talked a lot about the entire business, and it's down over 73%. From its all-time highs, but really it's the IQ8, which is the IQ series microinverters, which is the prominent and the flagship product for the company, which gives them a huge advantage over the more traditional inverters. And then, of course, we got the Enphase IQ5P battery, which on a capacity and power output basis kind of is under the shadow of Tesla Powerwall, which is more powerful in terms of output and battery capacity. But it really comes down to the technology and, just the overall insights that they provide us through their app that also makes a huge difference among homeowners and makes their entire solar system a lot more efficient than compared to some of the other brands out there. So, I'm really excited about the earnings call. Not so much about the earnings themselves. I'm really, really excited about the earnings call because this is a stock that's been selling off over 70%, and it's come down to pretty low levels now at $90. The lower it gets, the better the risk reward becomes. And it's coming down to some very good buying opportunities here. Now, of course, there's definitely a little bit of an election that plays a big role in this entire thesis for solar and renewable energy as well. Because as we know that one candidate, obviously pro renewable energy, kind of believes into climate change. The other one maybe not so much. But again, that's not a huge area of discussion or an influence, because at the end of the day, the companies that are making a huge change, that are doing well, they've got a solid product, are just going to be fine, right? So again, I think this is a stock that's worth looking into, and it's coming down to some pretty attractive levels, and that's why I'm getting interested once again. So we'll see what happens with earnings here. So what strike would you recommend? I'm okay letting my shares go. Cost basis is $76. So let's take a quick look. So $76 is your cost basis, 73. So definitely above your cost basis, right? So for this Friday, I don't know if there's going to be a lot of premium there, but maybe you might just find something. So for October 25th, $77 is going to give you $1.12, but delta is also pretty high. So market's expectations are 30% that it's going to expire in the money, unless you're fine with selling your shares with about $1 in profit per share in capital gains and about $1.12 in premiums. But you can also go up to as much as $80, collect like $51, and from 73 to 51, or no, from 73 to $80, Lamb Research, that needs to be a jump of about 9%, which I don't think that Lamb Research is going to be able to do. In the past earnings, let's take a look. In the past earnings, Lamb Research popped 7%. So this right here was a 7% rally. And then immediately after that, dropped over 9.8, almost 10% the next day. If you come over to the earnings before that, popped about, nothing, almost 2%. And the earnings before that, we had a gain of about 2%, and the next day another 2%. So Lamb Research is not a huge, it's not a very volatile stock. So I think $80 should be okay. Got a pretty low delta, and we're going to collect like $50. But that also leaves you with about $4 in capital gains if the stock ends up rallying harder. But of course, if it drops, then you're still going to make the $50, but you're going to have to hold on to that unrealized loss here. 79 also works, 78. So really 78, 79, if you're comfortable letting your shares go at those prices, would be pretty decent levels to look into. Okay, 5 more minutes until market close, everyone. Do me a favor, drop a like, subscribe to the channel if you haven't already, and share this live stream with other Enphase investors and traders that you know of that can take a look at the reaction of what Enphase is going to do post market close here. So there's the link. Definitely copy and again paste and share so that we can have more people join us for this market close and also for Enphase stock. So Enphase is going to be the main focus for today's market close live stream. And same time tomorrow, we're going to be talking about Tesla. We're going to be talking about Tesla. Tesla. That's the main focus for tomorrow. Well, after hours. Pre-market, it's going to be Coca-Cola. Coca-Cola tomorrow, pre-market. Tesla tomorrow, after hours. We've got a whole schedule for this week in our Discord. You can follow that schedule to better understand which companies we're going to be focusing on every single day. Of course, we're going to be going over everything, but which earnings calls we're going to be listening into live. So earlier today, as expected, we didn't have a lot of people for Lockheed Martin, even though it's a fantastic company to look into. But of course, today we've got Enphase Energy. Like twice. Thank you so much, Kevin. I appreciate you always, man. Jeremy says I sold calls in SoFi for $12 strike on 11/1. Yes, SoFi is reporting earnings. A 20% pop likely, unlikely. It is likely because it's a very low sort of priced stock here. So it's possible that, we see a 20% pop in SoFi. But unless you're fine with selling at $12, then that's totally cool. But yes, we'll be going over SoFi as well. They're reporting next week on Tuesday. So next Tuesday, they come out with their earnings, and we'll be here listening in to Anthony Noto, what he has to say about the company in the future, and whether we're going to get 4 consecutive quarters of profitability or not. Most likely we are. 4 cents per share is the expectation, but that's where I know a lot of retail investors are going to be focused on is SoFi. So here we go. By the way, we've got a poll going on right now. How many votes? We got 213 votes right now. Let's see if we can get to at least 215 before the numbers come out in about 6 minutes. So definitely do participate in the poll that we have going on in the live chat, whether Enphase is going to miss or beat expectations. Just for a little bit of context, Enphase has missed expectations 3 out of 3 times in the last 3 earnings year. And not just on revenue or earnings per share, in both revenue and earnings per share. So they've missed expectations all 3 times. If you were just looking at the last 3 times, Enphase got a 100% track record of missing expectations on both revenue and EPS. So let's see if that changes anything in the votes here. But right now we got 60% people now expecting that Enphase is going to beat expectations for their revenue and earnings. Actually, we've got earnings more specifically because I've got the Enphase earnings beat or miss. So earnings more specifically, we got 60% expecting a beat, 40% a miss. I'm on the miss side because I think 79 cents on the dollar is a very high expectation for Enphase, and I could be wrong. I hope I'm wrong, but I'm not expecting a huge beat here from Enphase. I do believe that the worst could very well be behind us, and that's really why I'm interested in the earnings call more so than the earnings themselves, because even if the earnings come in not so great, the call can give us a lot more insight into what the stock could do in the future, what the company could do in the future. Because as we've talked about it before, the revenue, the earnings, the profits, everything's just been going down, and the worst could be behind us. We could see a little bit more consolidation, and then of course start to see that reacceleration back up post 2024. So starting 2025 is when the recovery could really begin. But that's why the earnings insights are so important. The call itself, listening in from the management. Okay, we are ready for Enphase. Markets just closed here, by the way. And what I'm going to do is I'm going to remove everything, all the technical factors here. So there we are, $92.29 for Enphase right now, sitting at pretty much flat after hours. And I think after this candle closes is when we could see a huge move in Enphase. I'm going to keep a close eye on some of the latest tweets on Enphase as well. So we'll see if there's anything that comes up. But yes, so this right here is the page that we're going to reload right around 4:05 p.m. I think that's usually when they report their earnings, and we'll see how the stock reacts to the numbers. Who's ready? Who's got trades on this stock right now? Let me get a quick poll. 1, if you are trading Enphase. So type in 1 if you're trading Enphase. Type in 2 if you're not trading Enphase or even investing. So if you've got a position in Enphase or trading it right before these earnings, type 1 or type 2 if you're not trading it. As I said, I expect a miss, but I expect a pop in the stock after the earnings. I expect a move to the upside on the stock itself because in the past 3 times, even though the company's missed expectations, it has still popped on earnings by an average about 10%. So 3 out of 3 times, not 3 out of 3 times, I think one of those 3 times the stock was pretty much flat, but we have seen the earnings pop 2 out of those 3 times by an average of about 12%. There's been a pretty strong move to the upside for... Wow, we got so many ones here. What is going on? Wow, I didn't expect these many people to be trading or holding on to Enphase. That's crazy. It's crazy. Seems to be a lot of interest in the stock. Wow, that's wild. 2, just here to help the MoneyVest algorithm. Wow, that's a lot of people, folks. Okay, I'll also do a bit of an audio check once the earnings call begins. So again, we'll listen in to those earnings calls as well. So I'll do a bit of an audio check just to make sure that everything is working well. But my expectations in the next 3 minutes, I could be wrong, like I said, but I'm expecting a miss on EPS, but a rally on the stock. Expecting maybe the worst is behind us, especially on the back of some rate cuts that are coming in. Look at that, a little bit of a gap up, pushing up to $93. There we go, 1% move to the upside at the moment. We're gonna reload this page, see if we get any updates here from Enphase. So nothing yet. By the way, if you guys hear something, let me know. But I don't think we have anything as of yet on the company's webpage, investor relations. The stock here is up 1% right now. Texas Instruments is down a little bit over 10% right now. So you know what? We're just going to split this screen a little bit. We'll listen in. We'll take a look at Texas Instruments as well. There we go. Big pop to the downside. It's down, selling off. No, it's down about almost 2% right now. 190. Big Johnny kind of freaking everybody out. 10% move to the downside. It's only down 2% right now. Texas Instruments only down a little bit over 2% at the moment. But main focus on Enphase, about a minute 30 here. And we should expect to see the earnings for this stock here. It's kind of giving up on some of those pre-market gains right now. So it should be interesting. Sold $80 puts. I like it below 80. Have $90 cash secured puts expiring October 22nd. So I feel like a lot of people are trading puts on the sell side, which is again a bullish trade. Just so you guys, people who are new to options know, if you're selling puts, you are making a bullish bet. If the stock price goes up, obviously, then your puts expire out of the money and you end up making the premium, 100% of the premium. So that's really, I think, could be the trade for most people here. So nothing yet. Let's see. Okay, so estimates are 60 cents, revenue 7 point. That's different, Enphase Energy. But let's see if you have anything on the investor relations page. The stock here, very, very flat, very flat. We don't have a lot of momentum right now. Let's see what happens the next 1 minute. Who is ready? Who's ready for this? There's going to either be a lot of happy people in the chat or a lot of people that are going to be frustrated. Especially when you have so many people trading. That's going to be me tomorrow with Tesla. It's going to be, big pop to the downside, 1.9% lower. That's a pretty steep drop. 3.6, now sub $90. Let's take a look at the earnings here. Not yet available. I'm just going to... So there we go, down over... there's a lot of volatility here. It was down over 4 or 5%, and then it quickly got bought up here. Yeah, it seems to be very, very, very volatile right now. But it is selling off. It is still down on the first candle here, down about 2.2%. Just lost my whole life savings. Come on. Not your whole life savings. $380 million of revenue. I'm not going to trust that link. I don't know what that is. But okay, so here we go. So report numbers just came out. Miss on both accounts. 65 cents in earnings per share. We expected a miss. And revenue came in at $380 million. So the numbers are out. And this is what we have. Misses on both accounts for Enphase Energy. The stock right now is down a little bit over 2.4%. Not as much as what I think many people were expecting. It was down a little bit over 4 to 5%. However, 65 cents in earnings per share, $380 million in revenue right now for the company. Miss on both accounts. That's 4 consecutive quarters. 4 consecutive quarters of misses for Enphase. That's crazy. It's crazy. They've missed on both revenue and EPS 4 times in a row. Wild. Absolutely wild. So those are the numbers here. Let's see if we've got the full report. There we go. So there we go. Now we have the full reports for the company. Okay, so revenue came in at $380 million. GAAP gross margins of 46%. Non-GAAP margins of about 48%. We've got, let's see, revenue $380 million. That's a significant down from same time last year, as we expected, from 551 down to 380. Margins have also compressed, but just a teeny bit, 47.5 down to 46.8. Operating expenses from 144 million down to 128, so that's good. A little bit more of a cost control measure. However, the operating income just getting destroyed. I mean, from 117 down to $49 million here. Net income's down from 113 to 45 million, but a steep increase on a quarter-over-quarter basis, and on a non-GAAP basis, also, going from 141 down to $88 million, and of course, earnings per share down from $1.02 to 65 cents per share. 65 cents per share, of course, was a little bit of a miss, and the stock now down over 5.6%. So $86, $87 is where we are for the stock right now. So total revenue for the third quarter, $380 million compared to $305 million in the second quarter. Revenue in the U.S. for the third quarter 24 increased approximately 43% compared to the second quarter of 24. Let's see here. Non-GAAP operating expenses, 81. $1.77 billion of cash. We can pretty much, let's take a look at the outlook. Okay, so fourth quarter outlook, they're expecting $360 to $400 million, which if you compare this to what Enphase reported in the December quarter last year, so if I come over to, let's say, the daily chart, and we look at over here, this was the December quarter last year. Oh, this September quarter. This right here, December quarter last year, they reported revenues of $302 million. So at least we're seeing some potential growth on a year-over-year basis, because 360, 400, it's going to still represents on the mid guidance here, 375 divided by 302. We're looking at least a 24% growth year-over-year on the guidance side. But of course, it's still nowhere near close to where the peak revenues were back in 2023 for the company, right? Non-GAAP gross margins around 49 to 52%. And then we've got the balance sheet all the way down here. Cash and cash equivalents, we're sitting at around 256 million, with marketable securities about 1.5 billion, so combined 1.8 billion dollars. Inventories have come down, so that is good to see. For whatever reason, I don't know why they're comparing December 31st, 23 to like September 24, when in reality they should either be comparing year over year or quarter over quarter. I don't know why they're comparing like from the end of the year last year to like September 24. But anyway, it's kind of weird way of reporting the numbers there. But total current assets, 2.3 billion, slightly down from 2.4 billion as of December. Not same time last year, not the last quarter, but December 2023. And then total assets sitting at 3.2 billion. So liabilities have slightly gone up from 532 to 567. And that is primarily coming from deferred revenues, which has to be accounted for as a liability. And then total debt right now, non-current, sitting at 1.2 billion. So the company still has a pretty decent cash position, more cash than debt on the balance sheet. So that is good to see. Let's see if they did any share buybacks here in the September quarter. So if you come down, purchase of property, plant, equipment, purchase of marketable securities. So $319 million. So that's a heavy buyback. So, we've been talking about this in our, actually they did $50 million of purchases, repurchases of common stock is $50 million, which is actually the lowest in the last 4 to 5 quarters for the company. This was marketable securities, was essentially an asset purchase where the company is, putting money into debt securities, fixed income securities, government bonds, whatever, with again, the cash amount that they have on the balance sheet, they're just investing it in the markets. And this was the cash inflows from the maturities of the sale of marketable securities. But this right here, $49 million of cash, share buybacks here for the company. Of course, they don't pay out any dividends. But when it comes to, let's say, free cash flows, $170 million minus the purchase of property, plant, equipment of 8.5, we're looking at about $162 million of free cash flow for the company as well, which again is not bad. It's not terrible. I think the only reason why the stock might be down 5%, and look, this can change after we start hearing from the earnings call from the management, is because of the miss. Other than that, I think the guidance is okay from a year-over-year standpoint. Quarter over quarter, we're also expected to see a little bit of an increase, because actually a little bit of a decline. Depends on what guidance you take into account, because that's a pretty wide guidance, 360 to as much as 400, right? So that's a pretty wide range. Anthony, how much are you losing, Caddy? So I'm actually not invested in Enphase at all. I didn't trade it. I'm not invested in Enphase right now. I mentioned this earlier. I'm only here just to break this thing down in as much detail as I can provide you, and then of course listen in on the earnings call, and then see if the worst is already behind us. Because with the $380 million guidance that they've given us, and if you take into account net income of $45 million, which actually was not bad at all, non-GAAP basis 88.4 million, we're looking at a 65 cents in earnings per share. So if you really just take into account the last couple quarters here, so we've got non-GAAP 43 cents, we've got another 35 cents. So if you do the math here, 35 cents plus 45 cents plus the 65 that we just got, $1.45, right? And they've essentially guided for $360 to $400 million of revenue. So if you've got to apply a margin, a net margin on those revenues, so let's see, 88 divided by 380, we've got a net margin about 23%. So let's just apply 20% margin just to be on the safe side on the $380 million revenue. That's the mid guidance for the company. We arrive at a net income of $76 million in the fourth quarter 2024. So that's going to be their expected number. And then if you take a look at the shares outstanding, which if you come down on the income statement, you've got total shares outstanding right now as of the September quarter, sitting at 139 million, right? So just under 140. So divide this by 140, and that's 54 cents in earnings per share. You add this to, what did I say? $1.65, I think. So we're looking at a total earnings per share for the entire year, fiscal year 24, at $2.19. So at $2.19 is going to be the entire EPS on a non-GAAP basis for Enphase, given a 20% margin on the net income and a mid guidance of 380 million in revenue. And then if you take a look at the stock price, 86 divided by 219, we're looking at a P multiple of just under 40. So even after the decline, Enphase's price earnings multiple based on 2024 numbers sits at 39. That is definitely, still pretty expensive. However, that can change if earnings per share can quickly recover back to where they used to be. So on a non-GAAP basis, if I show you what 2022 looked like, or let's say what 2023 looked like for financial results, and if you scroll down a little bit for the entire year, diluted earnings per share was $4.41, right? So twice as much as what they're doing for 2024 on a non-GAAP basis. So all in all, when everything is said and done on a non-GAAP basis, their earnings per share has been cut in half, 50%. So if you've got a 50% decline in earnings per share, the stock price, it's only fair to reflect that in the stock price, and the stock is also down 60 to 70% from its all-time highs. So in just about a year, earnings have been cut in half. If you come over to what 2023 looks like, or 2022, I should say, let's take a look. 2022 was 462. So we were already starting to see a little bit of a decline, 462 down to 441, and then this year is most likely going to be 220. But the interesting thing is that if you've got Enphase in 2024 with an EPS of 220, and then next year we see that reacceleration back up, so post-24 recovery and earnings per share jumps, I think the expectations are for 87%. I could be wrong, but let me just take a quick look. So Enphase, under analyst estimates here, you've got, 2024, 261, and then yes, 87% is the growth rate for Enphase for next year. So that can put us back to $4.89. And so for that, if you take into account $86, that's where it is right now, divided by, let's say, it doesn't even go up to $4.90. Let's say it goes up to $4.40. And now you're looking at an earnings per share or earnings multiple of 19.5. So just as quickly as the earnings multiple can go up with the decline in earnings per share, they can also go down very quickly if the earnings per share goes up. So it works both ways. And so I think it's really a story of 2025. Now, of course, if 2025 ends up being a very good, solid year of growth in earnings and revenue, then this would be a huge steal because the price to earnings multiple can jump, from essentially from 40 down to 19 very quickly if earnings per share jumps. So that can be a good price to accumulate, but it really is contingent on what 2025 is going to look like for Enphase. And we've known that for a really long time. We've known that for a very long time because that's how it's been, right? 4 consecutive quarter misses is no joke. Earnings getting cut in half is no joke. Revenue getting cut in half is also a big deal. And that's really what the entire market's kind of focused on right now. So 8% sell-off right now for Enphase. We're going to listen in on the earnings call in about 13 minutes. So 13 minutes, the earnings call is going to get started. I'll do an audio check and we'll listen in to what the management has in store for us after a pretty brutal drop in the actual stock price here post-earnings. So miss on EPS, miss on revenue for everybody who's been joining us now. I'm going to go over to some of the comments here. Any guidance? Yes, Chris, we just went over the guidance. $360 to $400 million of revenue reported, expected. And right now, of course, down almost 8% with the expected earnings per share of $2.19. None. Are you planning to buy Enphase, Caddy? So I haven't made a decision yet. I'm going to listen in on the earnings call with all of you. We'll see what the management has for us, for the guidance. And more importantly, if they give us any color insight in 2025, because that's really the year that I'm really looking forward to, because rates are going to be lower, most likely. Like in a year from now, we know that rates are going to be most likely lower than where it is right now. So if rates are down, and the company starts to kind of really have that sell-through rates for their microinverters from third-party sellers, and there's going to be more demand for renewable energy, then there is still that hope that 2025 is going to be very strong. So Chris says, yes, need to deliver 2025 big guidance where it's going to $80. Yes. Okay, so let's take a look at Texas Instruments while we wait for Enphase's earnings call to begin. And Texas Instruments seems to be very flat right now. Not a lot of move, but forecast for fourth quarter below estimates on weak chip demand in industrial markets, and reported EPS of $7 to $29. That's the guidance, and revenue of $3.7 to $4 billion for the company. Third quarter revenues of $4.15 billion, and EPS coming in about $1.47. So there we go. We got $1.47 in EPS. Beat on revenue also, $4.15 billion. So McDonald's seems to be partnering up with Dollar Tree, which the market doesn't seem to like very much. And the stock is down 8%. Oof. That's a pretty brutal sell-off here. BofA Securities maintaining a neutral buy rating. And yes, we're seeing a pretty decent sell-off here on McDonald's at the moment. Pretty significant drop. So yes, Enphase down still, of course, down over 7 to 8%. And let's see, it's a good time to buy at $70 to $80. Again, I'll be kind of doing a new, another video on Enphase very soon, going over the entire numbers, what they actually reported, and what I'm planning to do with Enphase moving forward. So that I'm going to be sharing in my other video very soon. I haven't made a decision yet because the numbers, as expected, miss on EPS, miss on revenue. The stock price, though, definitely selling off quite a bit here. So let's take a look here. No, there seems to be some type of a CDC report. There's no partnership with Dollar Tree. Doesn't seem to be. There's some CDC report that is working really fast with McDonald's report, is what I'm reading. Yeah, some type of outbreak from McDonald's Quarter Pounders. That's a very interesting catalyst here. Some severe outbreak from McDonald's Quarter Pounders. People are just going crazy over how they had a Quarter Pounder yesterday, and now they might get sick. That's crazy. Some contamination of raw meat, hands, gloves touching the finished product somehow. It's crazy. It's wild. Wow, folks, stay away from junk food, please. It's not good for your health. Salads, proteins, organic, down almost 10%. Let's take a look at some other stocks here. Yeah, there seems to be some type of an outbreak from CDC report that came out. Starbucks also down over 4.4. What other publicly traded companies do we have? Wendy's. For the food chain, for restaurant chain, it's up 1.6%. What else do we have on the for the fast food chains that are publicly traded? I don't know. Is it so Wendy's, McDonald's, Starbucks? Yeah, Starbucks earnings. I don't think they report today. Do they? They weren't on our calendar. Yeah, they don't report until October 30th. Shamal. Starbucks was not on the schedule for today. Starbucks is not going down on earnings. They don't report until October 30th is what TradingView has. And then if you come over to our platform, I'm pretty sure they're also going to be for the same day. October 30th is going to be next Friday or next Wednesday. And there we go. Starbucks is reporting on 10:30. $9.5 billion of revenue, EPS of about $1.06. McDonald's is actually also next week, not this week, next week. They're reporting on 10/29. So they're going to be on Tuesday, next Tuesday, right alongside AMD, Visa, Google. So both McDonald's and Starbucks are next week. They're selling off on what I presume to be this catalyst of a potential outbreak with some type of quarter pounders from McDonald's. At least that's what was trending on Twitter. It's not being reported anywhere on CNBC or anything, but that's what I saw on Reddit and Twitter. A couple of reasons why it was selling off very aggressively. If you take a look at Chipotle here, let's see if there's any type of selling pressure for them. Yeah, GM reported pre-market, Andy. So we already covered that in our morning live stream. So if you come over to this week, you'll notice that today, Tuesday, we had General Electric, we had Philip Morris, Verizon, Raytheon, Lockheed Martin, Sherwin-Williams, 3M, and then GM was it after the bell? No, I think GM, we covered that earlier. Oh, there we go. Yeah, I was trying to look for it. I couldn't figure out the logo, but yes, GM was pre-market. They already reported $48.5 billion, almost $3 billion. Yes, Chipotle is also fine. It doesn't seem to be selling off. It really is. Yes, McDonald's and Starbucks. That is, Starbucks released pre-earnings. Man, these companies with these pre-earnings, they just can't seem to figure out. They just can't seem to wait. Why do all the interns have access to the earnings reports? I feel like I need to be live 24/7 to break down pretty much earnings every time, because it seems to me companies just So pre-release of the earnings or preliminary results for the full fiscal year 24, they are going to be suspending to release their forecasting moving forward. They're also expecting a little bit of a decline of 7% in the sales. Consolidated net revenues declined 3% to $9.1 billion. So Starbucks pre-releasing some preliminary numbers, suspending their guidance. And then you have the stock price selling off. It kind of throws off all the calendars, because I was planning on certainly looking at Starbucks on the day of, and now they've already reported it. New computer. Why is there going to be? Is it lagging or something? Okay, we've got earnings starting in about 4 minutes. So we're going to listen in to the earnings here, and I'm going to do a bit of an audio check. And yeah, now Reuters is reporting about the quarter pounders. Yeah, it's pretty crazy. I'm definitely going to be reading more up on that later to report to you guys. But yes, folks, drop a like, subscribe. We're just about getting ready to listen in on what earnings calls for Enphase here. So we'll see what the management has in store for us as the stock price here just absolutely collapses under its own weight, down almost 8%. Right now at the moment. So get ready, and here we go. The Money Vest Index pretty much closed at, I think, just over 3.8, so 3.83. That's where we are, optimistic, and these are some of the levels that we're also watching. Yes, Tesla earnings tomorrow. Tomorrow we've got Tesla earnings. We will be live to cover that. But like I said, do me a favor, drop a like and subscribe if you haven't already. We're getting ready for the earnings call for Enphase to see what the management says. And can the stock recover? Can the stock recover here at all? Is there any hope for Enphase? But I think it's going to be giving us some good premiums for selling puts. So what I'm going to do is I'm going to be most likely looking at closing out my SOXL puts. And then, yes, Texas Warehouse, I will take a look at it very soon. So don't worry. We'll talk about that right after the earnings call. But yes, I'll be looking at selling some puts on Enphase as well, because it's really just coming down to some very attractive levels. But I really need a little bit more confidence from the management that they do see light at the end of the tunnel. Because if there's no light at the end of the tunnel, we're just kind of headed into a dark dead end, which is not something I want to be a part of. So that's why earnings call, like I said, is going to be more important than the earnings themselves, because we expected the misses. However, I didn't expect the decline in the stock price. Because, I mean, again, based on historical numbers, we didn't. However, we did have 60%. Actually, now the polls have changed. I didn't even ended up closing this poll out, but we did have almost 500 votes, and most people voted, 60% people voted for a beat on earnings. And that changed after the earnings came out. So, of course. Anyway, so we've got about a minute left for the earnings call to begin. And I'm just gonna keep that playing, and as soon as it's started, I'll switch over to the audio. Just give me a thumbs up. We didn't have any issues with Lockheed Martin, so it was pretty much working just fine. So I think we should be fine. Okay. Just about getting ready here. Listen to some nice music, and as soon as it begins, we'll start playing it. 4:30 p.m. It's time. Man, my computer's starting to heat up. It's 4 years old. I really need to get a new computer, I feel like now. But I also don't want to sell or trade this computer, because this is the computer that's really grown this entire channel. You know, it's a laptop that I'm going to keep with myself forever, because of all the work. Okay.
Financial Results Conference Call. All participants will be in listen-only mode. Should you need assistance, please signal a conference specialist by pressing the star key followed by 0. After today's presentation, there will be an opportunity to ask questions. To ask a question, you may press star, then 1 on a touch-tone phone. To withdraw your question, please press star, then 2. Also, please limit yourself to one question and one follow-up. Re-queue to ask additional questions. Please note this event is being recorded. I would now like to turn the conference over to Zach Friedman. Please go ahead.
Good afternoon, and thank you for joining us on today's conference call to discuss Enphase Energy's third quarter 2024 results. On today's call are Badri Kothandaraman, our President and Chief Executive Officer, Mandy Yang, our Chief Financial Officer, and Raghu Belur, our Chief Products Officer. After the market closed today, Enphase issued a press release announcing the results for its third quarter ended September 30, 2024. During this conference call, Enphase management will make forward-looking statements, including but not limited to statements related to our expected future financial performance, market trends, the capabilities of our technology and products, and the benefits to homeowners and installers, our operations, including manufacturing, customer service, and supply and demand, anticipated growth in existing and new markets, the timing of new product introductions, and regulatory and tax matters. These forward-looking statements involve significant risks and uncertainties, and our actual results and the timing of events could differ materially from these expectations. For a more complete discussion of the risks and uncertainties, please see our most recent Form 10-K and 10-Qs filed with the SEC. We caution you not to place any undue reliance on forward-looking statements and undertake no duty or obligation to update any forward-looking statements as a result of new information, future events, or changes in expectations. Also, please note that financial measures used on this call are expressed on a non-GAAP basis unless otherwise noted and have been adjusted to exclude certain charges. We have provided a reconciliation of these non-GAAP financial measures to GAAP financial measures in our earnings release furnished with the SEC on Form 8-K, which can also be found in the Investor Relations section of our website. Now I'd like to introduce Badri Kothandaraman, our President and Chief Executive Officer. Badri?
Good afternoon, and thanks for joining us today to discuss our third quarter 2024 financial results. We reported a quarterly revenue of $380.9 million, shipped approximately 1.7 million microinverters and 172.9 megawatt hours of batteries, and generated free cash flow of $161.6 million. Our overall channel inventory remained normal as we exited Q3. For the third quarter, we delivered 48% gross margin, 21% operating expense, and 27% operating income, all as a percentage of revenue on a non-GAAP basis and including net IRA benefit. Mandy will go into our financials later in the call. Let's discuss customer service. Our worldwide Net Promoter Score was 78% in Q3, slightly down from 79% in Q2. Our average call wait times increased to 4.4 minutes from 2.5 minutes, partially due to higher call volumes from disruptions in the installer landscape. We are actively managing this while rolling out software fixes and automation to reduce wait times. Let's talk about operations. Our global capacity is around 7.25 million microinverters per quarter, with 5 million in the U.S. In Q3, we shipped approximately 1.2 million microinverters from our U.S. contract manufacturing facilities, booking 45X production tax credit. We anticipate shipping 1.3 million units from our U.S. facilities in Q4. We also introduced a higher domestic content SKU for IQ8HC microinverters to help lease, PPA, and commercial asset owners to qualify for a 10% domestic content ITC adder. This translates to about 40 cents per watt in savings for them. We are seeing strong traction in the lease and PPA markets for this product. We expect to begin shipping our commercial IQ8P-3P microinverters as well as our residential IQ8X microinverters also from our U.S. contract manufacturing facilities, featuring higher domestic content starting this quarter. Our cell pack suppliers in China have enough capacity to support our plans for batteries in 2024 and 2025. We are on track to producing the battery at our U.S. contract manufacturing facility in this quarter using domestically made inverters, battery management systems, and packaging, while continuing to source cell packs from China. Let's now cover the regions. Our U.S. and international revenue mix for Q3 was 75% and 25% respectively. For more visibility into our business, we will be providing regional breakdowns for Q3. In the U.S., our revenue increased 43% compared to Q2. The overall sell-through of our products in the U.S. was up 6% across all channels in Q3 compared to Q2. This increase was despite a large U.S. customer declaring bankruptcy in Q3. Our distributor sell-through in the U.S. was up 13% compared to Q2, which reflects improving market fundamentals in the U.S. In California, our distributor sell-through was also up 13% in Q3 compared to Q2. In Q3, we saw healthy growth for both microinverters and batteries in California. NEM 3.0 now represents approximately 65% of California installs, and the attach rate of our own batteries continues to be close to 50%. In non-California states, our distributor sell-through was up 14% in Q3 compared to Q2. Looking ahead, we see lower interest rates, ITC adders, and higher power prices as the key drivers for 2025 growth. In Europe, our revenue was down 15% compared to Q2. The overall sell-through of our products in Europe was a little more down, 34% down in Q3 compared to Q2. While every country in Europe has its nuances, the overall business environment in the region is challenging. Power prices have declined from the early 2023 highs. The economic growth is slow and the consumer confidence is limited. We are focused on what we can control. We are focused on building and strengthening relationships with installers. We are focused on launching many new products, expanding into a lot of new markets as we believe we are underpenetrated, as well as collaborating closely with our distribution partners. We believe this will position us well for significant growth when the cycle rebounds. I'll provide some additional color on our key markets in Europe, the Netherlands, France, and Germany. In the Netherlands, the solar market is transitioning away from solar-only systems due to regulatory uncertainty around NEM, which is about to expire in early 2027, and export penalties imposed by the energy providers. These issues have increased the adoption of batteries, which avoids export penalties and allows participation of residential solar plus battery systems in energy markets. While this transition is still in its early stages, we are encouraged by a strong engagement with the country's energy providers. We are well positioned to lead the market recovery in Netherlands with our microinverters, along with batteries, along with our upcoming new EV chargers, as well as AI-powered IQ energy management software, which is crucial to maximize savings and improve homeowner ROI. In France, our Q3 was impacted by summer seasonality. We expect a cooling off period for solar demand in the country, driven by expected utility rate cuts in early 2025. Overall, France remains a key growth market for us, given our market leadership there, as well as the country's low solar penetration. We plan to introduce many new products for France, mainly the new EV charger, batteries with backup, and energy management for hot water heaters. In Germany, we are excited about a few upcoming product launches that are imminent. These will expand our reach in Europe's largest solar market. Our three-phase battery backup solution for Germany, Austria, and Switzerland, which was unveiled in Intersolar Munich in June, has received highly positive feedback. Our IQ Balcony Solar is nearing launch. We are targeting a 400 megawatt market with this product and believe that Enphase microinverters are ideally suited for these very small systems. Additionally, we plan to launch the new IQ EV charger into Germany in Q4. A bright spot in Europe has been UK, where the sell-through was up approximately 80% compared to Q2. However, we are still underpenetrated in this market and have a lot more room to grow. There are similar countries in Europe, including Italy, Spain, Belgium, Luxembourg, Austria, Switzerland, Sweden, Denmark, and more. While each country faces its own unique challenges and opportunities, homeowners are increasingly prioritizing safety, reliability, quality, savings, and a seamless all-in-one app experience for their home energy systems, which perfectly aligns with our core strengths. We plan to introduce our entire product portfolio, the IQ8 series of microinverters, both single and three-phase batteries with backup, the new IQ EV chargers, which I talked about, AI-powered IQ energy management software, which I'll elaborate later, as well as the solar graph installer platform across many more European countries. We continue to make incremental progress in other regions in the world. Our IQ8P and IQ8HC microinverters are ramping well in India. We are now taking pre-orders for the battery in India, with shipments to installers to begin in December. In Brazil, we are ramping on the 480 watts IQ8P microinverters into this emerging residential market in order to support newer, higher power panels. In Australia, we recently started shipping IQ8X microinverters for higher DC input voltage panels and now offer 25-year limited warranty as default for all IQ8 microinverters, and this is currently the longest standard residential warranty in the Australian market. Let's come to our Q4 guidance. We are guiding revenue in the range of $360 to $400 million. We anticipate incremental improvement in our U.S. business and a continued slowdown in Europe in Q4. We are approximately 85% booked to the midpoint of our overall revenue guidance, very similar to last quarter. We expect to ship between 140 to 160 megawatt hours of IQ batteries in Q4. Our battery sell-through is doing well. It continues to increase, and we expect Q4 to reflect a slight uptick in demand. The reduced battery shipments in Q4 compared to Q3 is primarily due to channel restocking in Q3 that will not repeat in Q4. Before we talk about new products, let's discuss the evolution in our industry away from single hardware components and towards total energy systems. In many countries around the world, solar only is no longer enough. Our Enphase systems are now composed of IQ microinverters, IQ batteries, EV chargers, and increasingly sophisticated IQ energy management software to manage multiple use cases, including rate arbitrage, grid resilience, VPP participation, wholesale market participation, and more. All parts of the system must be best in class with software that ties it all seamlessly together in order to win. We believe our current and future products uniquely position us to win in this total system solution-focused markets. Let's talk about IQ batteries. Our third generation IQ battery 5P is continuing to be very well received by the market. It offers an industry-leading 15-year warranty with differentiated quality, serviceability, modularity, and power capability. We are on track to pilot our fourth generation battery in the U.S. in the fourth quarter and begin production in early 2025. We believe this new battery will be a game changer for us. The battery takes up 60% lesser wall space due to its integrated battery management and power conversion architecture. In addition, the fourth generation IQ battery will be paired with our new IQ meter collar and enhanced IQ combiner. The battery system will reduce installed cost by approximately $300 per kilowatt hour for a typical system with backup, making us highly competitive for all use cases. We have expanded the IQ microinverter family into 51 countries and plan for more by the end of the year. We are particularly excited about Japan, where we expect to launch our IQ8HC microinverters in early 2025, targeting a 1.3 gigawatt market. The Tokyo Metropolitan Government has offered subsidies for MLPE products, making it very attractive for consumers. Japan's solar market, especially Tokyo, with its small system sizes of 2 to 3 kilowatts, complex roofs, and demand for quality, aligns well with our strengths. Let's talk about our commercial microinverter, IQ8P. The IQ8P, with its new three-phase cabling system, is perfect for small commercial solar installations between 20 and 200 kilowatts. We have over 380 sites in the U.S. with an average size of 50 kilowatts, and the feedback so far has been quite positive. These three-phase microinverters will soon ship from the U.S. factories with increased domestic content, offering a 10% ITC adder for commercial asset owners, which should drive demand up even further. Let me provide an update on our IQ9 microinverters powered by gallium nitride technology. The IQ9 family is designed to handle higher DC input currents up to 18 amperes and supports elevated AC grid voltages, including 480 volts for the small commercial market. IQ9 is expected to come in two power variants, 427 watts and 548 watts, offering flexibility and performance. We are on track for a launch in the second half of 2025, positioning us to meet growing market demands. Let's dive into EV charging. We are gearing up to launch our second-generation IQ EV charger across several European countries in Q4, tapping into a $1.4 billion annual market. With up to 22 kilowatts three-phase charging, the charger integrates well with Enphase solar and battery systems, enabling homeowners to minimize electricity costs by using excess solar energy. Key features of this new IQ EV charger include dynamic phase switching and 1 ampere current control, which results in much more efficient green charging, ISO 15118 support for AC bidirectional charging in the future, and compatibility with MID meter in Germany, as well as compatibility with OCPP 2.01 software for third-party control, making it a very comprehensive and future-ready solution. Let's cover software. Our IQ Energy Management software supports grid services programs, VPPs, in regulated markets like the U.S. and energy market participation in deregulated markets like Europe and Australia. In the U.S., we are active in around 25 programs across key states in California, Massachusetts, Texas, and North Carolina, with more than 10,000 customers and 120 megawatt hours of battery capacity enrolled. These programs enable homeowners to discharge batteries during peak demand, supporting the utilities in times of need. In deregulated markets, our software enables homeowners to earn up to $1,500 annually through energy providers. As electricity rates become more complex, our AI-powered software differentiates us, maximizing ROI and reducing payback period. Let's discuss SolarGraph, our installer platform. We've added new features to SolarGraph in Q3, including an updated battery design tool, as well as a do-it-yourself permit plan set for U.S. customers. SolarGraph is now available to both residential and commercial installers in the U.S., Canada, Brazil, Germany, Austria, and Netherlands, with plans to expand to more countries in the coming quarters. Let me conclude. We have worked diligently to manage Enphase through an industry slowdown. The midpoint of our revenue guidance for Q4 is flat with respect to Q3 and is a 44% increase from our revenue bottom of $263 million earlier in Q1 24. We expect Q4 to also be impacted by the same large U.S. customer due to its bankruptcy, but we believe a substantial portion of this revenue will return through our distribution channels in future periods. We generated approximately $321 million in free cash flow for the first 9 months of 2024 and have maintained strong gross margins throughout the downturn. Over the last year, we have expanded our global footprint in microinverters and batteries and are developing a strong pipeline of innovative products that are nearing launch. Our three-phase battery, IQ Balcony Solar, and the new IQ EV charger for Europe are set to expand our served available market by $4 billion. Our upcoming fourth-generation battery system featuring the IQ Meter Collar and enhanced combiner is expected to significantly reduce installation costs for backup. Our GaN-powered IQ9 microinverters will enable us to enter new three-phase commercial markets, which are incremental for us, while boosting power and lowering costs in the residential markets. We are also excited to advance our AI-powered energy management software in collaboration with retail energy providers in the Netherlands, as well as cater to complex energy markets around the world. Looking ahead to 2025, we see improving U.S. market fundamentals driven by lower interest rates, ITC adders, and higher power prices in key markets that are expected to drive nice growth. Our best-in-class microinverters, coupled with our next-generation battery system, should allow us to defend and grow our market share in the U.S. Internationally, we believe we are well-positioned for growth when the solar market stabilizes due to our broadened geographic reach and product portfolio. We remain committed to delivering best-in-class solutions and are energized by the road ahead. With that, I will turn the call over to Mandy for her review of our financial results. Mandy?
Thanks, Badri, and good afternoon, everyone. I will provide more details related to our third quarter of 2024 financial results, as well as our business outlook for the fourth quarter of 2024. We have provided reconciliations of these non-GAAP to GAAP financial measures in our earnings release posted today, which can also be found in the IR section of our website. Total revenue for Q3 was $380.9 million. We shipped approximately 730 megawatts DC of microinverters and 172.9 megawatt hours of IQ batteries in the quarter. Non-GAAP gross margin for Q3 was 48.1%, compared to 47.1% in Q2. GAAP gross margin was 46.8% for Q3. Non-GAAP gross margin without net IRA benefit for Q3 was 38.9%, compared to 41% in Q2. Our GAAP and non-GAAP gross margin was negatively impacted by a one-time 3.3 percentage point charge related to cost of goods sold on batteries. GAAP and non-GAAP gross margin for Q3 included $35.2 million of net IRA benefit. Non-GAAP operating expenses were $81.6 million for Q3, compared to $81.7 million for Q2. We continue to invest in new products, customer service, and geographic expansion. GAAP operating expenses were $128.4 million for Q3, compared to $135.4 million for Q2. GAAP operating expenses for Q3 included $43 million of stock-based compensation expenses, $3.1 million of amortization for acquired intangible assets, and $677,000 of restructuring-related expenses. On a non-GAAP basis, income from operations for Q3 was $101.4 million, compared to $61.1 million for Q2. On a GAAP basis, income from operations was $49.8 million for Q3, compared to $1.8 million for Q2. On a non-GAAP basis, net income for Q3 was $88.4 million, compared to $58.8 million for Q2. This resulted in non-GAAP diluted earnings per share of 65 cents for Q3, compared to 43 cents for Q2. GAAP net income for Q3 was $45.8 million, compared to $10.8 million for Q2. This resulted in GAAP diluted earnings per share of 33 cents for Q3, compared to 8 cents for Q2. Both our non-GAAP and GAAP diluted earnings per share for Q3 were negatively impacted by 9 cents per share net of tax related to impairment of an investment in a private company. We exited Q3 with a total cash equivalents, and marketable securities balance of $1.77 billion, compared to $1.65 billion at the end of Q2. As part of our $1 billion share repurchase program authorized by our board of directors in July 2023, we repurchased 434,947 shares of our common stock in Q3 and an average price of $114.48 per share for a total of approximately $49.8 million. We have $598.3 million remaining for further share repurchases. In addition, we spent approximately $6.3 million by withholding shares to cover taxes for employee stock vesting and options in Q3. That reduced the diluted shares by 59,607 shares. We expect to continue this anti-dilution plan. In Q3, we generated $170.1 million in cash flow from operations and $161.6 million in free cash flow due to our strong working capital management. Capital expenditure was $8.5 million for Q3, compared to $9.6 million for Q2. Now let's discuss our outlook for the fourth quarter of 2024. We expect our revenue for Q4 to be within a range of $360 to $400 million, which includes shipment of 140 to 160 megawatt hours of IQ batteries. We expect GAAP gross margin to be within a range of 47 to 50%. We expect non-GAAP gross margin to be within a range of 49 to 52% with net IRA benefit, and 39 to 42% before net IRA benefit. Non-GAAP gross margin excludes stock-based compensation expense and acquisition-related amortization. We expect the net IRA benefit to be between $38 and $41 million on estimated shipments of 1.3 million units of our U.S.-made microinverters in Q4. We expect our GAAP operating expenses to be within a range of $135 to $139 million, including approximately $54 million estimated for stock-based compensation expense, acquisition-related expenses, and amortization. We expect our non-GAAP operating expenses to be within a range of $81 to $85 million. We expect our GAAP and non-GAAP annualized effective tax rate, excluding discrete items, for 2024 to be at 18%, plus or minus 1% with IRA benefit. With that, I will open the line for questions.
We will now begin the question and answer session. To ask a question, you may press star, then 1 on your touchtone phone. If you're using a speakerphone, please pick up your handset before pressing the keys. If at any time your question has been addressed and you would like to withdraw your question, please press star and then 2. Also, please limit yourself to 1 question and 1 follow-up. Re-queue to ask additional questions. The first question comes from Christine Cho with Barclays. Please go ahead.
Thank you. Good evening. I guess I just wanted to start on the batteries. You mentioned that you expect sell-through to be up slightly for batteries in the U.S. quarter over quarter, but shipments are down because you restocked during the quarter. Can you give us a sense of what sell-through was in 3Q? Is the 4Q guide more in line with what sell-through levels actually are? And if we could get a rough split of the shipments going to the U.S. versus everywhere else.
Yeah, so basically, we actually told you 90 days ago that, the channel on batteries is light, and we are going to get the channel to a healthy level. We have fixed that problem now. So therefore, basically, you should think of our shipments into the channel, and the shipments out of the channel are at equilibrium, which is they're the same. So that's why that number of 140 to 160 megawatt hours. And you should think of our U.S., roughly in line with our revenue split up, which is the 75-25. You should think about a similar split up for batteries too.
Okay. And just as a follow-up to that, revenue was up 43% quarter over quarter in the U.S., I think said, and sell-through was something in the single digits across all channels. So was the disconnect here all the batteries as we just kind of mentioned, or is there any restocking here on the MI side? And then just as we think about Europe as well, it sounds like your sell-through was worse than what your sell-in was there. So maybe weeks of inventory went up there, and I guess how should we assume what you're assuming for 4Q?
Right. So basically, the reason why our revenue increased by 43% is quite simple. We stopped undershipping in Q3. So therefore, our revenue increased to normal levels. So basically, we are now at a place where in the U.S., we are at equilibrium. Sell-in and sell-through are matching. And that's how we can maintain a healthy weeks on hand. For us, a healthy weeks on hand always means between 8 to 10 weeks and not crossing that number, 10 weeks number, which we have instituted the discipline. So that's why you can see that the revenue increased 43%. That's the sell-in revenue. Now, the good news in the U.S. is our overall sell-through across all the channels, both distribution channel and direct channel, was up 6% in Q3 compared to Q2. And I said this increase was despite a very large U.S. customer declaring bankruptcy in Q3. If you just look at our distribution channels, our sell-through for both, for the U.S. was up 13%, and our sell-through in California as well as outside California was up at similar levels at 13 and 14% respectively. And in general, the sell-through is healthy across both microinverters and batteries. Coming to Europe. In Europe, it's a slightly different story. Our revenue was down because, once again, we have learned the discipline. When our overall sell-through products are down by 34%, we have to react. We have shortened that cycle quite a bit compared to what happened last year. So we continue to undership in Europe, even with this reduced sell-through. And so our weeks on hand in Europe is a little bit high, but we are extremely disciplined. And the moment when things turn around, our weeks on hand will come down very quickly. And we are not worried about that. We are cautious for Q4. This is why our guidance incorporates a slowdown in Europe in Q4, and we are not pushing more into the channel.
Okay, the next question comes from Colin Rusch with Oppenheimer. Please go ahead.
Thanks so much, guys. It sounds like you're getting a little bit of traction with these vehicle chargers. Can you talk a little bit about your strategy around evolving the sales of those and how we should think about the trajectory on attach rates as we get into 2025?
Right. On the EV chargers, basically, there are two interesting markets. One, of course, is the U.S. market, and the other is the Europe market. We bought a company called as Clipper Creek towards the end of 2021. They made high-quality chargers, excellent service. They had reasonable market share in the U.S. What we did was we took that, we essentially moved manufacturing to our contract manufacturing facilities in Guad. We then did some surgery on the product. Those chargers were what you call as unconnected chargers. They did not have Wi-Fi in them. So we took our time to make that product. And last year, we introduced IQ Smart EV chargers in the U.S. In the meantime, we've been working furiously in Europe, where the adoption is also quite nice and high. Europe market is a very interesting market. There are about 14 countries that we will introduce our IQ EV chargers to. Our SAM, served available market, is about $1.4 billion. And these chargers are a little bit different from the U.S. They are all smart chargers. And as I mentioned, there are several features there in the EV chargers for Europe. For example, most of these EV chargers are three-phase EV chargers. And when you do, for example, green charging with the EV chargers, many of the competitive products, they need a particular minimum power in order to charge from solar. Our product has got an innovative feature where it can start with single phase, enable green charging from solar at a lower power, and then switch to three phase when the solar energy ramps up. That's a big deal. And it integrates, of course, very well with the Enphase solar and battery systems, enabling homeowners to view everything from the app. The other big thing we are interested in is that there is two ways you can talk about bidirectional EV charging. There is AC bidirectional charging and there is DC bidirectional charging. AC bidirectional charging means there is no external inverter outside. DC bidirectional charging means you take care of the inversion outside. So our product, the latest IQ EV charger, is compatible to a standard called ISO 15118. That ISO 15118 is a standard where the EV charger can talk to the car and it can get things like the state of charge of the car, which is not possible today. So AC bidirectional, we could see AC bidirectional standard evolving. This EV charger is capable of doing that. While we are embarking on a AC bidirectional charger as well for the US and for Europe as needed. That AC bidirectional charger, as I said before, DC bidirectional charger, is basically takes the DC input from the car and you have inverters outside and then it connects to the grid. So that design is an all GaN design. Each inverter that we are building is about 3.8 kilowatts. It interfaces to 1000 volt DC on one side, which is interfacing to the car, and AC on the other side. So for example, in order to have 11 kilowatt bidirectional charger, you will have 3 of those 3.8 kilowatts inverter. And these 3.8 kilowatt inverters are built according to the same microinverter architecture that we have. So zooming back down, right now the most important thing for us is to introduce this IQ EV charger second generation into 14 countries in Europe, take advantage of the big served available market of $1.4 billion, and then work on both AC bidirectional charging in Europe and DC bidirectional charging in the US.
Okay, thanks. And then just very quickly, please, can you give us an update on the initial traction in the commercial market and the size of systems that you're able to address here as you get into 2025? Are you able to get up into the 100 to 200 kW systems, or are you still generally on the smaller side on the commercial systems at this point?
Yeah, our IQ 8P is a commercial specific microinverter. We built it with a 3-phase cabling system. It's perfect for small commercial solar installs between 20 and 200 kilowatts. As you know, the commercial projects, they have a slightly longer cycle time. So we started shipping this product about 9 months ago, and the traction has been quite good. We reported, I think, a couple of hundred sites 90 days ago. Now, things are starting to ramp. We are over 380 sites. In fact, in the Fremont building that I'm sitting right now, I have 396 panels on the roof. I can monitor it. I can monitor it nicely. I can immediately find out if an inverter is not working. That's what the installers value. The higher power production, the per panel monitoring, the immediate focus on quality. It's a 214 kilowatt system. It uses 550 watt panels. So this microinverter is perfect, 480 watts. So we're very excited by this. We are doing a couple of things. One is we aren't yet addressing the 480 volt market, which we are going to address with IQ9. That product is coming out in the second half of 2025. That's going to be a gallium nitride design, suitable for high power with ultra-low cost. Then the second important thing that you should note is that domestic content. These IQ8P three-phase microinverters are going to be shipping from the U.S., where they have an increased domestic content that enable the commercial asset owners to get the benefit of an additional 10% ITC. So we think that will also propel demand. So we are quite excited about that.
Yeah, thanks, guys.
And the next question comes from Mark Strauss with J.P. Morgan. Please go ahead.
Yes, good afternoon. Thanks for taking our questions. Going back to RE+, we were hearing quite a bit of optimism looking into 2025, just kind of based on a view that interest rates would be lower. Since then, there's been a pretty big spike in rates in the wrong direction. Just kind of curious to the extent that you've had kind of very recent conversations with some of your customers, if that's creating any pause in the industry.
Well, I mean, our data, as I told you, our sell-through data for Q3, things are headed in the right direction in the U.S. California, for example, we talked about NEM 3 being a drag. That is no longer the case. Installers have gotten used to NEM 3. At least some of the installers have gotten used to NEM 3, and they are finding both solar plus storage working out in terms of economics. Outside the U.S., outside California, also our sell-through data looks fine. We are up about 14%. I've been monitoring since the 6 weeks of RE+. Our sell-through data is things are looking better week on week. And, we do have, we think things will be incrementally better in 2025 in the U.S. market. The things that are going to contribute to it are, of course, further rate cuts, the 10% domestic ITC adder. That is a big deal because it saves the TPO provider, or it helps them to make an additional 40 cents a watt. That 40 cents a watt can be reinvested back, into the installers or into increasing demand on the consumer front. And of course, the utility prices. The utility prices are continuing to increase. And so we are seeing, of course, I'm not disputing what you said, but the data still seems to be optimistic towards the growth in 2025 for the overall U.S. market.
Okay, that's great to hear. Thanks, Badri. And then real quick on Europe, you mentioned some of the cross currents with some of the kind of the industry headwinds, but maybe offset by new products and market expansion, that kind of thing. Adding all of that up, do you care to comment about kind of what 2025 Europe might look like for Enphase? Fully appreciating that you do not guide a year out, but just generally speaking, any color would be great. Thank you.
Yeah, look, we think Europe, Q4 might be a little stressed, but we think we are at the bottom there. The key about Europe is there are some really great markets which are very nimble, like Netherlands, which have been, affected a lot due to NEM uncertainty. And that is slowly getting solved. We are confident as we go into 2025, what's going to happen is that Netherlands is going to shift slowly but surely from a solar-only play to a solar plus storage plus software play. We are already working with nearly, I would say, 10 energy providers just in Netherlands alone. Some of them, for example, will need PV curtailing, meaning solar curtailing for very small times during the year where, otherwise they incur a lot of penalties. So that market will need to be transformed a bit, but I think it is at its low point, and we have a tremendous opportunity there to reshape that market. Now, France is the country where we have historically done very well. We have over 50% share. And France, basically, what we are hearing, there could be some headwind due to utility rates in the early part of next year, but the fundamentals there are strong, and everybody expects things to come back up strongly as we approach the end of 2025. Germany, there has been general weakness. There is a few installers who have gone bankrupt, very similar to what has happened in the U.S. And once again, we think, what we are doing there is stick to the basics. Stick to the basics is we are introducing new products and adding a served available market of $4 billion to our portfolio. And those new products are three-phase battery with backup. That's for the DACH regions. DACH is Germany, Austria, and Switzerland regions. Then we are talking about IQ balcony solar, which is brand new for us. And we are ideal. Enphase is ideal to play in that very small system. So by the way, balcony solar is not restricted to only Germany. Many other places, like for example, Austria, Belgium, France, they all have their own versions of balcony solar, and we will be following up and introducing all of those products as well. But balcony solar in Germany is 400 megawatts. Then I already talked about our IQ EV charger. So we are not stopping. We are under-penetrated in Europe. We have a lot more countries to cover. We are focusing on the areas where we can control, which is releasing new products, managing the channel, getting into new regions, working closely with both the long tail installers plus a few top tier installers. So we are doing all of the right things, and we expect the market to rebound sooner or later.
The next question comes from Brian Lee with Goldman Sachs. Please go ahead.
Hey, everyone. Thanks for taking the questions. I had two, both related to guidance. I guess first, at the midpoint of the revenue guidance, you're flat for 4Q. I think there's three drivers, right? Battery storage, Europe, and SunPower. You gave us the guidance for battery storage. That seems like it's a $15 million headwind. And then Europe was a $5 to $10 million drag in 3Q. Is it similar in 4Q? Because you're saying it's going to be down. And then, SunPower might have been doing less than 50 megawatts a quarter at the end of their existence, but that's still $10 to $15 million of revenue for you. So really question is, can you help kind of quantify what seemed to be, three meaningful buckets of headwinds for at least the sequential growth into 4Q? And then I had a follow-up.
Yes. In Q4, our overall sell-through of microinverters is doing a little better, it's doing a little better compared to Q3, and we can see that, and that's what we are guiding towards. And as I told you on the battery side, we are talking about 140 to 160 megawatt hours versus the 170 megawatt hours. You are right in the range that you said. SunPower is a headwind of $10 to $15 million. You are correct about that, and we don't expect that to immediately come in Q4, but we are working with all of the installers, and we should be able to get all or most of that in the coming quarters. So to answer your question, we expect upside from increased microinverter sell-through. The battery sell-through is also doing fine. except for that one-time channel destocking. And, Europe has got a slightly continued weakness compared to Q3.
That's super helpful, Badri. Second question, on that same line of thought, you strip out the battery storage, microinverter sales, you're saying are going to be up about, 5% or so in the 4Q guide at the midpoint. But I would have thought, stripping out all these other factors like SunPower, Europe, et cetera, you have U.S. seasonality, U.S. domestic content, and also it sounds like you had some price increases in the U.S. So can you talk us through some of the tailwinds that, I don't know if they're actually showing up in 4Q or if they're going to show up later, but I would have expected those to maybe help you a bit more into 4Q outside of all these, other headwinds we just talked about. So, domestic content, U.S. price increases, just any general thoughts around that. Thank you, guys.
Yeah, we are not increasing any prices in the U.S. The domestic content product is a new product, and that for increased domestic content, yes, there is an extra adder. And, we do expect, like what you said, we think those are the drivers. The increased domestic content is a driver. Sell-through on microinverters is a driver. Batteries, it's going to be generally strong, and I think we expect it to be even stronger from Q1 25 when we have our fourth generation system. So that piece, but you're generally right. The way I would characterize it as if microinverters is a little bit healthy, it covers the other areas which are weak.
The next question comes from Phil Sheen with Roth Capital Partners. Please go ahead.
Hey guys, thanks for taking my questions. First one is on, in the past you've talked about getting to a $450 to $500 million sell-through demand run rate, and back in May you thought it might be sometime in Q4. What's your thinking now in terms of when you can hit that on a quarterly basis? Is it sometime through 25, maybe Q2, or could it be more in the back half? Thanks.
Yeah, I mean, look, we talked about that, and we have had a few things there. We have had a few installer bankruptcies. I mentioned a big one, and we've had some headwinds. Well, the U.S. is proceeding in the right direction. Europe is an entirely different story. So basically, if a few months back, we didn't anticipate the installer bankruptcies, one in the U.S. We didn't anticipate the European business declining further. And that's reality right now. And that's reality. But the fact of the matter is the distribution market in the U.S., like what I told you, with the distribution sell-through numbers for U.S. as well as, meaning California, is very encouraging. Non-California in the U.S. is also very encouraging. Of course, the large customer who went bankrupt, we lost some revenue. We expect to get that revenue back. We don't guide our 2025, but those are our growth vectors. We're going to be introducing our fourth generation system in Q1. We expect that fourth generation system to basically reduce the installed cost by $300 per kilowatt hour, making us competitive not only for grid tied, which we are today, but for backup. So today, for example, on the batteries, our shipments from Q2 to Q3 increased by more than 40%. Our sell-through is climbing up continuously there. And we, for grid tied systems with NEM 3.0, what installers need to do is to treat the installation like a solar installation. There is no complicated wiring to take care of. There is no loads to manage. So therefore, they hang two IQ battery 5Ps, two 5 kilowatt-hour batteries onto the AC bus. They route it to the combiner along with solar, the same combiner, and they're done. So that is still quite strong for us. Now, with this fourth generation system, where we have the meter collar, we have the battery, we have the enhanced combiner, we will be eliminating the system controller cost. We'll be eliminating both the component cost as well as the labor. And we expect to save $300 in installed costs. So we think that will unleash a spurt of growth for us in terms of backup. So basically, the vectors in the U.S. are, continued improvement in the sell-through. It is the higher utility rates, lower interest rates, and domestic content. In Europe, it's a little bit of a wild card right now, but I outlined our plans very clearly. We think we are scraping the bottom in Q3 and Q4 for some of the markets. The fundamentals are there. We are working with the right players in Netherlands. We are working, for Germany, we have the served available market increase for Europe, we have a served available market increase of $4 billion with a lot of products specifically for Germany. The three-phase backup is most relevant for Germany, Austria, and Switzerland. And the balcony solar is also relevant for Germany. So we have all of those in line. So I can only give you a qualitative color that, we aren't waiting for the market to improve. We are introducing new products. We are working with our installers. We are not stuffing the channel, most importantly. And we are doing all of that globally.
Great. Okay. Thank you for all the color, Badri. Shifting to Powerwall 3 and Tesla, our work suggests that the Powerwall 3 demand is substantial and widespread. I know it is a string inverter, and I know, and you just laid out how your technology is meaningfully better and more advanced. That said, I know many of your customers are ramping up substantial Powerwall 3 volumes. So when you talk to your customers about that, what are they telling you? And then are you surprised by the volume of business that is shifting to Powerwall 3? Some of your larger customers are sharing with me that you may be resigned to losing share to Powerwall 3, especially until your new battery and meter collar and combiner box comes out. How much are you planning to lose? I know it's a tough question, but I think it's an important one. So thank you for taking it.
Yeah. So thank you for the question. The key, I can react to data in front of me. All of the data which we have continuously. We do have third-party reports, and those all show basically that we are holding share. That's data point number one. And the second point which we highlighted is basically our sell-through in California, which is probably the area where you're talking about. Our sell-through in California is up 13% quarter on quarter. And our sell-through is up on both batteries and microinverters because they go hand in hand with each other. And on batteries, as I told you before, our installs, if you see our installations in California, and it makes sense, is 70% of our installs are grid-tied installs in California. if 70% are grid-tied installs, like what I said, the cost that you are talking about is not higher. The cost, in fact, it is cheaper to install an Enphase battery there. We are talking about two 5P batteries. We are talking about hanging it off the AC bus. We have the same combiner box that is used, so that's not an extra box. So that is why, probably our market is grid-tied market. And now we are in the process of fixing that problem, and we are going to release in the first quarter the latest and greatest battery that we got. That's a 10 kilowatt-hour battery. That 10 kilowatt-hour battery has got a wall space of 60% lesser compared to our own battery there. And there is no system controller that used to be there before. Now there is the collar. We expect, the collar is done development. It is in compliance. We expect to work with utilities in the next few months and get utility approval in Q1 25. So with the collar, with our battery, which has got neutral forming, by the way, and our enhanced combiner, which has got a lot of bells and whistles that our installers love, the cost of the installation is substantially going down to $300 per kilowatt hour for a typical storage system with backup. So basically, we have solved that problem. We need to get that solution to the market in Q1 25. And then what will happen is we will grow in both grid-tied markets as well as markets with backup. And that will be a key focus for us in 2025 and will contribute to growth. The other things which you already know, but I will tell for the benefit of the audience, is, Enphase, the advantages are numerous. Power production. Between power production with the string inverter and power production with the microinverter, you can get anywhere from, 4 to 15% advantage, especially where there is shading, which is there in many places. With Enphase, there is reliability. There is no single point of failure. When a microinverter on the roof fails, we still have 95% of the system working, assuming the system has got 20 microinverters. When a microinverter inside the battery fails, we still have 83% of the system working. Every IQ battery has got 6 microinverters. So reliability and no single point of failure. Our warranty is, warranty on batteries is 15 years. Warranty on microinverters is 25 years versus common warranty of 10 years on string inverters. Simplicity, plug and play, is just very easy to do on the roof. Low voltage DC on batteries and obviously AC on the roof, loved by firefighters. I've had many firefighters telling me, and FEMA, by the way, which is basically the authority in the U.S., they do recommend microinverters because of that. So other things, 24/7 support. If there is a problem, Enphase will answer the phone. We never take batteries off the wall. We repair them, replace boards in situ. In situ means we do not, customer is not down for more than a few days versus being down for weeks and having complex logistics between the supplier and installer. All of that doesn't happen. Serviceability is very crucial. When you have a fleet of batteries and you have service problems, you keep spending your time on service, you made a mistake in picking an architecture. And by the way, batteries are notorious for this. Inverters, solar inverters, the industry is getting mature, but batteries is still wild, wild west. AC architecture, we believe in a distributed architecture, which is, I already told you, no single point of failure. All AC. Everything is AC coupled. We have, our solar, our storage, our EV chargers, our bidirectional chargers, everything is AC coupled. So basically, the power that a homeowner gets, for example, is both solar plus storage. So, I outlined all of the things that, those are our strengths. Plus, with the fourth generation system, we are going to be very competitive on backup. And we expect, all of these to basically, increase our market share on batteries going forward.
Thank you for the color, Badri. I'll pass it on.
Yep, thank you.
The next question comes from Jordan Levy with Truist. Please go ahead.
Afternoon. Appreciate y'all squeezing me in here. I'll stick to one. Just on the pricing side, I think, you gave a lot of commentary, but if I heard correctly, I think you mentioned some pricing concessions in Europe with all the weakness. You've been pretty consistent in how you approach pricing on a price to value basis, but I just wanted to see if there's how you're thinking about that into 4Q for Europe especially, and then any change in the pricing strategy overall, particularly around micros.
No, pricing, I did not mention we did anything for Europe, so I think you must have heard it or you must have misunderstood it. So we are not dropping pricing anywhere. But, pricing is something that we manage on a daily basis. We instituted a pricing team in 2017, and there is a team of about 6 people. Their job is to make sure we always price on value. So therefore, they spend an inordinate amount of time in understanding the full system, bill of materials, to make sure that, there is, we clearly understand the areas where we can save money for the consumer in terms of the overall system. So we do that very diligently. And I'm not saying that we never drop price, but it is a non-event for us because, sometimes if there is a loyal customer, he needs a little bit of help, we will help them. But that's not an event. It is a business process. And we expect that business process to continue.
Got it. Thanks so much for all the detail.
Thank you.
The next question comes from Pavel Molchanov with Raymond James. Please go ahead.
Thanks for taking the question. Can I ask kind of high level about Europe? Yes, power prices are indeed down, but module pricing is down 30% versus a year ago, as well as lithium-ion batteries. Why is that not acting as a counterbalance against cheaper electricity?
I think hi, this is Raghu. We think that part of the reason, if you again look at it by country, in the case of the Netherlands, which was a solar-only market before, it was very clear that the NEM uncertainty as well as homeowners being penalized for exporting solar into the grid was a big headwind. And so obviously, Netherlands, we really think we are doing all the right things there for that market to completely turn around by the addition of batteries. So solar plus batteries in a dynamic electricity market where energy can be traded into the market is a very good way for homeowners to improve their ROI. In general, I think the urgency that was there before during the crisis, during the Ukraine crisis, and the steep increase in power was that urgency is gone. And then in general, we also know that the economy is also is not doing that well. So the combination of those things, we believe, are the reasons why Europe seems to be slow. But as Badri mentioned, it's possible that that Q3, Q4 could be kind of the bottom there. And specifically for Enphase, with the introduction of all the new products and the expansion of our SAM by $4 billion, can be a catalyzer for us to get Europe back where it needs to be.
I'll follow up with a quick question about India, which no one has asked about yet. You recently announced a new product launch in the Indian market, which I typically think of as a very price-sensitive market. Are you going to be cost competitive there?
Yeah, let me tell you about India. This battery will cater to the premium segment. There are many single-family homes, apartments, villas, and in India, if you didn't know, you lose power 5 times a day. And the system today is a backup UPS, a lead acid battery, basically. And you all know how lead acid batteries are. That's why we shifted to lithium ion. So we introduced this battery in India. It's a 5 kilowatt-hour battery. And it is our mainstream battery that we are shipping. And it is perfect for India because Indian families, Indian homes, even high-end, may not use more than 10 kilowatt hours a day. So basically, this battery comes with a backup switch. And that backup switch makes you won't even know you are running on backup. And so it's a beautiful solution for many of the luxury builders where they can build it into some of the homes, which can cost anywhere from $200,000 to a couple of $1 million. They can build it into the home and raise the value of the home and provide complete energy independence. So we are working with these builders. And of course, granted, the volumes are, we have to see, and it will ramp. But, India is a beautiful market because there is a big problem, which is power shutdowns, and we have a solution for the high-end markets.
India also has a lot of irradiance, so it's a very, very good solar market. Now there's a new program for small systems and a very big incentive programs for small systems, 2, 3, and 4 kilowatts. And so those are all a perfect market for India. So we are very bullish about that market.
Appreciate it.
The next question comes from Dylan Nassano with Wolfe Research. Please go ahead.
Hey, good afternoon. I just wanted to comment the market share question from a slightly different angle and ask just specifically on the TPO market. I think you had kind of identified that as an opportunity to take incremental share, specifically in 4Q, and just want to check in on how that's kind of playing out. Thank you.
Yeah, we work with all of the TPO providers. We have a great relationship with everybody. And our market share, the way we have built market share to be even more than 50% in the U.S. is by working with everybody. So we work with tier 1 installers, tier 2 installers, long tail installers, And now all of those installers are being served by a handful of TPOs. And all of them are working with us on domestic content. And once again, if it was not clear, we are already shipping domestic content microinverters with increased domestic content right now. And that is on our mainstream product called IQ8HC. Soon, we will start shipping batteries with domestic content in November. So basically, if they have a reliable supply of domestic content, they're looking for that right now because there are very few people with clear plans for domestic content. And we are working with each and every one of those TPOs.
Thank you. If I can squeeze in just one more, you covered kind of managing the battery channel earlier in the call, but just looking past 4Q as you get ready to start shipping the 4th-gen battery, I mean, how should we think about, your kind of strategy to prep the channel ahead of that? Thanks.
Yeah, there is 2-3 things you need to note. One is as we introduce batteries into a lot more regions. For example, I told you we are underpenetrated in a few regions in Europe, including Germany even. So the 3-phase battery is going to come into Germany. That's going to increase our battery volumes. We're going to introduce batteries into many more countries in Europe. That's going to increase the volumes. And that we are still talking about the 3rd-generation battery. In the US, we are going to switch to the 4th-generation battery. And that is going to result in a drastic reduction in bill of materials and installation costs, like what I said. So why did I tell that to you? Because therefore the inventory transition is a little bit easier for us because we have the 3rd generation still shipping for the rest of the world, and we will ramp on to the 4th generation. So we don't need to have any hard transition, and we expect that transition to be well managed and not leaving any problems in the channel.
Next question comes from Dimple Gosai with Bank of America. Please go ahead.
Thank you for the question, Badri. So my understanding is that the increase in ASPs and IRA benefits, help to counteract the domestic manufacturing costs and product mix impacts on gross margins. Was this a lever you pulled, or how do you think about the sustainability of these higher ASPs going forward?
Yeah, I mean, it's quite simple, right? The cost manufacturing in the U.S. means our cost increases many times by 10 to 15%. So therefore, all we are doing is to make sure that we take care of that in terms of pricing. But if you look at the big picture, the few cents a watt that we might be adding is creating a value of 40 to 50 cents a watt for somebody. And that 40 to 50 cents a watt can be invested back, can be taken as profits, can be given to the installers. There are various ways that each TPO will choose to cut it. But that's the math. We are generating that value. We are generating the domestic content. We are taking a few dollars to do that because in the U.S. manufacturing is a little more expensive. We are covering for those costs, and there is still a lot of value being generated.
Understood.
The next question comes from Kashy Harrison with Piper Sandler. Please go ahead.
Good afternoon, and thank you for taking my questions. So my first one, and hopefully this isn't a dumb one, but you highlighted that distribution growth in 3Q was much higher than sell-through from all channels because of the SunPower bankruptcy. How do you know that the growth you're seeing in distribution isn't because the bankruptcy occurred and your distribution customers aren't actually just gaining share from SunPower?
We don't, but what we know is this, that the time period is too short for installers to adjust their plans. And it typically takes some time for installers to bleed off their current inventory. So our projection is there will be some installers who will come through in Q4. Majority of the installers will come through from Q1 onwards through the channel. The good news is we are working with almost all of them. And the good news is they all know us very well. We are meeting with them, and they're all, making plans for ramping with us.
Thank you. And just a quick follow-up. A big part of the Enphase story, going back to your initial, the start of your tenure, was just taking out costs year after year and just passing on some of those costs to your customers. Lately, whether it's the duopoly, inflation, domestic content, it just seems like there haven't really been a lot of cost cuts on the inverter side. And I'm just wondering, with IQ9 being released later this year and potentially driving your costs down meaningfully, how are you thinking about potentially returning to the old days of costs out and then passing on some of that to your customers? Thank you.
Yeah, basically, if you look at IQ9, our aim, our desire is to deliver increased watts at the same cost to installers. So the way we would price that product is appropriately like that, which is utilizing advanced technology like gallium nitride. We, are able to achieve high power with improved form factor and cost. And how is that possible? For example, I'll just describe to you a simple change. In the microinverter today, our bread and butter microinverter called IQ8HC, we have 4 silicon AC FETs, which are 600-volt transistors, 600-volt FETs. We also have a big transformer there, the round transformer that you've seen in our microinverters. Now, going to GaN, 4 FETs will be replaced by 2 bidirectional FETs. That's called BDS, bidirectional GaN switches. 4 will become 2. And then, if we run the GaN transistors at an increased frequency, by the way, we are getting ready to run them at a megahertz in IQ10. If we run them at a high frequency, then what happens is all of a sudden the transformer cost and form factor can come down drastically. In addition to many passive components that can come down drastically. So that's how we are thinking. We are thinking in terms of overall component cost reduction. We'd like to offer installers 10% higher value. That is IQ8HC has got a power of 384 watts. IQ9 product, which will release in second half of next year, will have 427 watts, approximately 10-12% higher. And we'd like to make sure that is given to installers for a similar price that they buy today. Thereby, the cost per watt for them is much more efficient. And that's our plan on the microinverters. Now, I already told you about our plans on batteries. Battery costs are continuously going down. Cell pack costs are continuously going down. According to a market study, cell pack costs will soon be well below $100 per kilowatt hour. And with designing the system properly, with neutral forming embedded in the batteries, we are able to drastically reduce the installation costs for our batteries, which is you no longer need a complicated backup box. You only need need the collar. Collar is not a new concept. It's been there for some time. We need a collar. We need the battery. Then we need our combiner box that works with both solar, storage, EV. It's got load control in it. So we are trying to integrate, we are trying to make like 7 or 8 boxes go down to 3, or 2 or 3 at the end of the day. So that's on the storage system side. I talked about microinverters. I talked about storage. Then we are also constantly looking at balance of system. Balance of system is how can we convert, for example, how can we eliminate our combiner boxes? What can we do? Maybe we can eliminate our combiner boxes one day by going to solid state breakers in the main panel. We are looking at that, and that will potentially take several thousands of dollars out because no longer there would need something to be installed. So in almost all of these cases, technology is the answer. And that's what we are focused on, GaN technology. It's breaker technology, battery technology. And we will continue to innovate.
And also software, right? Software, the quality of the software, AI-powered software can really also improve the homeowner's ROI just by being very intelligent about when to charge the battery, when to discharge the battery, when to buy from the grid, when to sell to the grid. So you're making real-time decisions in software to also improve the homeowner's ROI, because that's what we care about at the end. We also have power control system software built into our combiner boxes that can avoid main panel upgrades. Again, applying technology, hardware and software technology to improve the homeowner's ROI. So, we are looking at systems. We started with solar only, but now we have moved to comprehensive energy systems now. And so we have to look at all elements of the system and the system itself and how to continue driving the cost down. And here are numerous examples that we have given you on what we are doing to drive these costs down.
The next question comes from Maheep Mandloi with Mizuho. Please go ahead.
Hey, Maheep Mandloi. Thanks for taking the questions. Maybe just one quick one on the IQ9 timing. I think you said second half of next year. Is that for the commercial or the residential? And if just the commercial, then when do you expect the residential launch?
We'll start with the commercial microinverters. The commercial microinverters will address 427 watts and 548 watts of AC power. They will take care of three-phase 208 volts and 480 volts. Note that 480 volts three-phase is a brand new market for us. And what we have heard in the small commercial market, which we talk about, which consists of schools, small businesses like restaurants, churches, apartments, any small scale building that you can think of. We've heard that 75% of them are 480 volts and 25% are 208. Today we are only addressing the 208. And we are going to expand that fan in the second half of 25. Following that, we will introduce our residential microinverter. There are two flavors there. One is the 427-watt residential microinverter that we are talking about, and the other is 548 watts for emerging markets. Very high power panels, for example, in India, panels will be 650 to 700 watts. Similar in Brazil, similar in Mexico. In many emerging markets, residential markets, we need a high power solution, while in the US and Europe, we need a 427 watt solution. And that will immediately follow. So we expect to introduce all of it in the second half of 2025.
Got it. And just on the cash, you have almost $1.8 billion now. And any thoughts on how to deploy that, just for buybacks or anything, any other use going forward here?
Yeah, we look at, as I said before, we look at three things. One is making sure we have enough capital for expansion, whether it's a factory, whether it's a contract manufacturing line, whether it's some other new line of business, first priority. Second priority is obviously looking at M&As. For example, we are quite interested in energy management software. We are also looking at basically, interesting things on EV chargers as they become mainstream, which is bidirectional charging will make EV charger integral part of solar and batteries. So we are looking at that. We are also looking at, commercial batteries there, the scope and opportunities for us. So we are casting a wide net. And of course, with this macro, there are many companies who we look at. But of course, our standards are very high. We will not buy, companies that we think don't fit with us. So we are very selective, but we are looking at many of them. So that's the second one. And then the third is if there is enough cash left over, we do a systematic buyback. We've been doing a systematic buyback in the last few quarters, and we expect to do so in consultation with the board, especially whenever we can be opportunistic and do when there is some pressure on the stock, we will do.
Got it. Thanks for taking the questions.
Thank you.
And the next question comes from Julien Dumoulin-Smith with Jefferies. Please go ahead.
Hey, guys. I'll make it super quick here. Thanks for the time. Just what's the % mix of domestic content SKU, 3Q, 4Q, and what you expect in the 1Q for U.S. product?
3Q has not ramped, so I should say close to zero. And, 4Q, our estimate is anywhere, something around 10% is our estimate, 10 to 15%, and doing a steady ramp from there on.
Okay, linear off that baseline. Thank you very much. I appreciate it.
Thank you.
And the next question comes from Austin Moeller with Canaccord. Please go ahead.
Hi, good evening. Thanks for taking my question. Do you have any concerns about the 30% residential tax credit in the IRA being changed by a new Congress or a new presidency next year? And how would that affect your expectations for U.S. growth in the out years?
So obviously, an ITC is very important for the U.S. market. So I think, if that gets disrupted at this stage, that would not be good for the overall market. I think, but it would also be bad for the general. We believe it will be bad for the general economy. If you look at the fact of the matter is demand is going up substantially. Electrification is taking place in the homes. People are buying EVs, heat pumps. That demand has to be met. We know all the data center demand is going up substantially as well. And all of this demand is being met by, vast majority of the demand is being met immediately by renewables. And so any hit to a 30% ITC is going to be bad for everybody. And what the IRA has done is created a lot of jobs here. All the manufacturing has come back here. So we peg the probability of ITC going away at being very, very low, maybe zero.
Great. Thank you for the time.
This concludes our question and answer session. I would like to turn the conference back over to Badri Kothandaraman for any closing remarks.
Yep. Thank you for joining us today and for your continued support of Enphase. We look forward to speaking with you again next quarter.
The conference is now concluded. Thank you for attending today's presentation. You may now disconnect.
Holy shit. I mean, that was just an insanely long earnings call that I've ever been a part of. That conference call lasted 110 minutes. Almost 2 hours. Did anybody count how many analysts were on that call? I think it might have not even just been the analysts. It's just Badri talks way too slow about everything and takes way too long in answering. Anyway, so the bottom line is, I'm not going to take too much of your guys' time right now. But I also ran a poll to better understand how many people here watching truly understand Enphase's products. And I was kind of surprised, but not a surprise at the same time, because I asked you guys this question in the polls. Do you know exactly what Enphase does and how their technology is different than competitors? A whopping 53% of you guys said no. And I think that in itself, in a nutshell, represents exactly what the issue is with Enphase. Even in the call, you can see that they are talking in too technical terms about the different nuances, about the smallest details about how their products are superior and better, more efficient, and ones that actually make sense over the long term. However, the consumer doesn't know that. I think so Enphase really is dealing with a significant marketing problem where the consumer is, at the end of the day, an average person in the US, right? Average working Joe, who is really contemplating whether to continue paying their electricity bill or to install Enphase's microinverters and solar panels. And that decision tends to be a very technical decision. It has to go through a lot of analysis related to the capital investment and the cost savings. And so the sell-through rates have really come down for Enphase because of the lack of understanding of their product itself. I think they were really technical about the entire nuances of their product and the new innovations and the new products like the bilateral EV chargers, which I think is going to be a very interesting game changer. However, there's also a lot of competition in EV charging space. I think their biggest flagship product, the microinverter and the battery packs, there were some questions about the battery packs being compared to Tesla Powerwall, which I don't think that Badri addressed that very well, because he did mention that 5P batteries, 2 of them are cheaper than the Tesla Powerwall, so it gives them a bit of a superiority, or in other words, some advantage. However, 3 5Ps stacked against 1 Powerwall is still not going to be enough comparison, because we need 3 5Ps stacked against 1 Powerwall in order to match the power output and the capacity as well for the battery itself, because 1 5P is less than 4 kilowatt of battery output. So, and again, Tesla Powerwall well in the 12 to 13 kilowatt hours of that battery capacity, and outputs also way above than the 5Ps. So there's definitely some concerns that on the battery side, Tesla Powerwall is gaining some market share. However, it also operates on a string inverter system, which is where Enphase has a better technology, because it works on microinverters. So there's no one single point of failure. There's more insights and more efficiency on a single solar panel across the entire system versus an entire system altogether, which is what Tesla's focusing on. So I think it really comes down to Enphase's lack of sort of explanation of the product itself, because at the end of the day, I think these earnings calls should really be utilized by keeping it short, concise about the existing present situation of the company, the future innovation, and I think it really should be focusing on existing customer stories. I think that is what Palantir did really well. Is Alex Karp kind of learned this lesson over the years, where instead of being too technical on these calls and talking too much about the product and how it's going to be the next big thing with the new innovations, investors at the end of the day really want to learn more about how it's being utilized today. How is it being validated today? So if they can figure out customers, households, and commercial customers that are using their technology, I think the story that he told about his own Fremont factory where he was sitting at with over 389 kilowatt hours of battery capacity on the roof with over hundreds of solar panels and having the insights on his phone. I think that was very interesting. I think we need more stories to better understand how people are using Enphase on a day-to-day basis to save money. Charge their electric vehicles, have that bilateral EV charging where the battery pack within the electric vehicle can also serve as a storage unit, and of course a storage unit on in the home, and again the entire grid. And I think that's where the actual sort of X factor comes in for Enphase instead of being too technical, because we do have over half the people, 200 votes, and over half the people still don't know what Enphase does. What do they do? And what exactly is their technology? What separates them? And so if people don't know them, they will never understand their product. They will never know what the cost savings or the benefits are. And I think kind of Tesla goes through that same process as well because of the lack of marketing and advertising. There's still not a full understanding of what Tesla vision is and the camera-based vision is, the Tesla AI, the amount of miles they've collected, the data they've collected. And so that can always be a little bit of an issue. And, I was just thinking about it in my mind as the earnings call was going on. For example, if you make a case for NVIDIA, right? And if I ask the same question, if you know exactly, can you tell me what NVIDIA does, right? We understand that they produce chips, semiconductors, GPUs, but we still won't be able to tell it too technically exactly what they do. However, we don't need to know, because we're the consumers of not the chips, but the end products, which is laptops and phones. And so companies that are selling that to us, Apple, Samsung, a lot of these hardware manufacturers, they do a really good job in marketing. If you take a look at Apple's marketing, they make it very, very simple. So everybody knows what Apple is, how they sell their products, what differentiates them from other competitors. And so that's really what it comes down to, right? So, but Enphase, when they're selling directly to consumers need to know them, right? They need to know and understand their product and what they're selling and how it can benefit them. So I think that's one of the reasons. And, he did mention that when it comes to US, there's going to be some tailwinds, some upshots related to better sell-through rates, some more domestic expansion. And then also one of the biggest reasons was the reduction in interest rates. However, that is a very, very macro-driven catalyst. May or may not happen. We just don't know yet. So if I'm betting on Enphase simply based on the macro factor that rates are going to come down, I don't think that's going to be a very bold bet. And in European markets, they were talking about how they're going to expand to new offerings. They still believe they're scratching the surface here. It's a very underpenetrated market. And so there's going to be new products launched, battery packs, and especially in India. Like I was looking at, India, you spot on with this analysis that, there's a lot of power outages. You guys know that I've been live, when I've been in India, and there's so many power outages that happen all the time. Of course, lithium-ion technology, lithium-ion phosphate technology for batteries is going to be very, very incredible. However, the pricing is going to be a big issue for India, right? If people can't afford to install solar panels and solar systems and microinverters in the U.S. when they cost anywhere from $12,000 to $18,000, they're certainly not going to be spending that much money in India. Maybe the higher end customer, maybe they're going to be interested in spending that much money to install solar panels and microinverters, but other than that, it's just not going to be a mass market until they get those costs down. And even if they get those costs down, they need to be pushing that cost over to the customer. They can't be focusing on increasing their margins. However, as a consumer, it is really important to push those costs over to the consumer so that they can save money and install them cheaply. But if they want to keep those costs away from the consumer, they're going to expand those margins. That's going to lead to better profitability, but then that's also going to lead to lower sell-through rates. So it's really kind of finding that balance between those two things, between how much cost you want to pass on to the consumer, how much you want to retain to you can expand those margins higher while also maintaining higher sell-through rates. And then finally, some of the more unimportant stuff like wait times, warranties, like it's really useless to talk about what the warranty is. Sure, 25 years on the IQ8s and 10 years on the battery packs. It's great, but it is not something that, in my opinion, it's like a waste of time to talk about, our wait time was 4 minutes in the last quarter. Like, okay, great service, but really it's all about product development, making sure that people understand the product, better marketing, and sell-through rates need to be back higher. So incrementally, they're expecting 2025 to be better. However, it's still not that much confidence that I was looking for from the earnings call. Especially the fact that I got super frustrated after a certain while that it went on for just, and the next question. Anyway, So it's a little bit past 2 a.m. right now. I still have to do the market update, so that's going to be coming out later today. So thank you so much for joining, everyone, for probably one of our longest live streams on the channel, almost 3 hours long. So thank you so much. I really, really appreciate it. And make sure that you drop a like, subscribe to the channel if you haven't already. And as always, happy investing. I'll see you maybe not on the next live stream, because these live streams are just getting crazy here, with every analyst getting 2 questions, 15 analysts on the call, 30 questions each, 2 minutes per question. That's crazy. Anyway, thank you so much for joining, everyone. Happy investing. I'll see you all